Hey guys, my name is Steven. Welcome to my Robinhood investment portfolio. Uh, as you can see, I'm up 67 cents today thanks to Bitcoin. But the first stock in my portfolio is Aurora Cannabis. Aurora Cannabis is a Canadian company engaged in the production and distribution of medical marijuana. They currently operate in 24 countries, and what really differentiates them from their competitors is that they're able to produce more than 600,000 kilos of cannabis with its recent acquisitions and its state-of-the-art Aurora Sky facilities, which is basically a greenhouse on steroids. My average cost on my position is $8.93. They make up about 2.6% of my portfolio. With Aurora Cannabis, this is just like my spec stock. I don't plan on adding more into my position unless it dips down to where it did back in January and December in the $5 and $4 range. One thing I like about the Robinhood platform, especially the desktop version, is if you scroll all the way down, it shows you what other members on Robinhood actually paid for the stock. And the average price paid for Aurora Cannabis is $7.90. So my average cost on it's a little bit higher. But the next stock in my portfolio is Iron Mountain. And Iron Mountain is a REIT. They are a record management service provider. They acquire their money by collecting rent from customers using their storage space. They have been able to scale their business to meet the needs of their customers. For example, they are located nationally and internationally, which gives businesses the opportunity to keep all their record management services within one vendor. It's a convenience factor. In addition to boasting a 98% customer retention ratio, which means their customers are happy. And when their customers are happy, they tend to use their services more. They currently yield a 7.7 dividend, and they make up about 5.30% of my portfolio, with my average cost being $32.24. And looks like the average person on Robinhood paid about $33.37, which I'm glad I'm a little bit below that. Okay. The next stock in my portfolio is NRZ. So NRZ, New Residential Investment, is another REIT. They invest and manage investments related to residential real estate properties in the United States. They make a majority of their money through MSRs, which is a mortgage service right. An MSR is when an existing mortgage is sold by the original lender to a third party, who then collects monthly mortgage payments. Right now, with a current dividend yield about 12.5%, which is a little high. Honestly, the only reason I purchased this stock was to help use its dividend income to help supplement the purchase of other dividend stocks. This is not a stock that I plan on adding more to in my position. I'm happy where it is right now, making up about 2.5% of my portfolio. My average cost is $16.85, and it looks like Robinhood's. Oh, looks like they don't have. Oh, there it is. Looks like the average price on Robinhood is 16.48. So I'm around. I'm around being average. Okay. And the next stock in my portfolio is APLE. Apple Hospitality is another REIT I own. I own a very small position. I own what, 20 shares? Yeah, 20 shares. I own 20 shares. They invest in income producing real estate in the hotel and motel industry. They operate under the Marriott and Hilton brand with a current dividend yield of 7.58%. I think they're a very good stock to own, a monthly dividend stock to own during a bull economy, not so much in the downturn, since they do receive a majority of the revenue from hotels. My average price is $15.85, and it looks like the average price on Robinhood is $16.49. I honestly think anything under $16 would be a good buying point for this stock. And the next stock in my portfolio is BMY. Bristol Myers Squibb discovers, develops, and markets drugs for cardiovascular oncology and immune disorders. One reason I really like Bristol Myers Squibb is because of the recent acquisition of Celgene, a biopharmaceutical company. They focus on the cancer treatment, which is an area with strong drug pricing power. And with its recent government pushbacks on drug companies to lower their cost, I believe Bristol Myers Squibb will be in a great position to better price their pipeline products with its current acquisition. They currently yield a 3.35 dividend, and they make up about 5% of my portfolio. My average price on BMY is 45.75, I'm currently down on my position, but this is the one that I plan on holding for a while. And honestly, anything that has a yield of more than 2.9% that beats the inflation rate, I think is pretty good. Let's see what the average person on Robinhood paid for this. So that looks like the average person paid about 48.81 for BMY. So I'm a little bit below that, which is pretty good. Now the next stock I own is CVS. Now, CVS Health provides health services and plans in the United States. CVS has more than 9,900 retail locations and 1,100 Minute Clinic locations. With their recent acquisition of Aetna, a health insurance company, and partnership with Target to make CVS the pharmacy and clinic operator at all Target locations. One reason I really like this deal is because CVS has been under a lot of pressure from Amazon entering into the healthcare sector, and with CVS and Target partnering, will enable Shipt, a subsidiary of Target, to deliver prescriptions from CVS across the country. With a current yield of 3.64%, I think CVS is a pretty good stock to own. It currently makes up about 5.18% of my portfolio. My average cost is $59. As you can see, I'm pretty down on my position, about 7.5%. But I think this is a good stock to hold for the long term. Looks like the average price paid on Robinhood is about 58.62, so not too far from the average. Next stock on my portfolio is Activision. Now, Activision Blizzard was formed in 2008 when Activision and video game publisher Blizzard merged. Activision owns 7 franchises that have grossed over $1 billion in revenue with games like World of Warcraft, Call of Duty, Skylanders, Diablo, Overwatch. Activision has 3 major releases for 2019, being Call of Duty Modern Warfare 4, which is something I'm really excited for, uh, Crash Team Racing, which I've never heard of, and Call of Duty Mobile, uh, with the possibility of Diablo Immortals being released by the end of the year. Along with adding to their mobile game segment, Activision purchased King Digital for about $6 billion, and Digital is responsible for games like Candy Crush and Farm Saga. So it's nice that they actually added more to their repertoire, their online mobile platform. Currently, my average cost is $63.56, which is kind of low. Which is kind of high. Uh, I basically caught a falling knife. I was trying to. My average cost is $63.56, which I'm down a lot on my position. But let's see what the average person paid on Robinhood for. So it looks like the average person was a little bit smarter than me. They paid a better price than I did at 53.54, which a current dividend yield of about 0.44%. It's not a company that you want to invest for their dividends. They can possibly grow it since it's a low payout ratio, but I think Activision is a good long term stock to hold. I'm really not too worried about some of the short term anguish that I'm experiencing with my 25% loss in return, but I think is a good long term stock to hold. Now the next stock I own in my portfolio is AT&T. Now, AT&T provides telecommunications, media, and technology services worldwide. Wireless communication brings in about 40% of AT&T's revenues, and it is the second largest U.S. wireless carrier. With its acquisition of Warner Media, it gives AT&T access to a strong content library with well-known franchises like DC Entertainment and Harry Potter, along with owning HBO. I believe that AT&T has put itself into a position for stable cash flow for the years to come, which will protect its current dividend yield of 6.27%. So my average cost on AT&T is $30.47, making up almost 3% of my portfolio. This is a company that I actually plan on adding more to my portfolio, at least bringing it up to 5%. And let's see what the average person paid. So it looks like the average person paid $32 for AT&T. I honestly think anything in the $31 to $30 range is something I'd feel comfortable at purchasing. So if it ever does go back there, I will for sure purchase at that point. And the next stock I own is Bank of America. Now, Bank of America is one of the largest financial institutions in the United States with more than $2 trillion in assets. They operate in 4 segments: consumer banking, global wealth and investment management, global banking, and global markets. One reason I really like Bank of America is how they've been able to grow their dividend. They've been able to grow their dividend to almost 70% the last 5 years with a payout ratio of 24%. With a current dividend yield of 2.1%, I think Bank of America has a lot of room to grow its dividends along with capital appreciation. My current cost on Bank of America is $28.68, making up 2.75% of my portfolio. I think anything under $30 for Bank of America is a buy. The average person on Robinhood looks like they paid 27.20, which is actually a very good buying point. And I hope to continue to buy Bank of America as long as it stays underneath the $30 range. I think it's a good long-term hold. And it's always nice to know whenever you have billionaires like Warren Buffett who's in a position for Bank of America. Now the next stock I own is, let's see, ET, and not the alien. ET, Energy Transfer, owns and operates crude oil, natural gas, and natural gas liquid assets in the United States and China, with a current dividend yield of 8.5% and a payout ratio of 84.8%. This stock right here, I believe, is not for a risk adverse investor because any changes in margin or interest rate hikes can leave the dividend very unsafe. I think this is a good stock to own, but in moderation. So that's why I only have less than 2% of my portfolio into this, uh, with my average cost being $15.45. So I'm down on my position. But it looks like the average person on Robinhood paid $14.63. So it's not too bad. Now, the next stock in my portfolio is, let's see, next stock is Apple. Now, at this point, everyone knows what Apple is. They are a tech company that makes consumer electronics. The iPhone is their most popular product and generates more than half of its revenues from iPhone sales. With slowing iPhone sales, a silver lining in Apple's pipeline is their services, which is up 16% from last year, and its wearable technologies, which had a 50% increase year over year. With a current dividend yield of 1.55%, which isn't something too extravagant, and a payout ratio of 25.5%, I believe it leaves room to steadily for Apple to steadily grow their dividends while rewarding shareholders in the form of capital appreciation. Uh, I currently bought in at what is it, $207, which I'm down on my position. I bought this just before the market correction in December, when they hit the $1 billion status. Let's see what the average person on Robinhood paid. So it looks like the average person on Robinhood paid 171 for Apple, which is honestly a very good price. And Apple is another stock that I plan on adding on into my portfolio. Just hoping it dips down again. We have another market pullback, so I can buy into it. So the next stock I own is KHC, Kraft Heinz Food. In July of 2015, Kraft merged with Heinz to create the third largest food and beverage manufacturer in North America. This stock has been beaten up over the past few years with the SEC for its accounting policies to its dividend cuts, and also a lot of people thinking that Kraft did overpay for Heinz, which is typically the case for whenever another company acquires another one. Um, I still believe Kraft Heinz still has room to downtrend. Not much. I pretty much think it's a bottom since we are at the point where Warren Buffett was basically losing money. So I would say the bottom is probably around $28. But with its new CEO, a former Anheuser-Busch marketing chief, I think that the company can, as long as it's a long-term bet, the company will do well. With my current average cost of $30.87, I'm currently up on my position. They make up about 1.9% of my portfolio, but I plan on adding to my position. Let's see what the average person on Robinhood paid. So it looks like the average person on Robinhood is really hurting right now, with almost a 40% average paid, which is not too bad, but with a dividend of 5.8%. In the meantime, you could have those dividends coming in. Okay, next company in my portfolio is PPL. Now, PPL is a utility holding company that distributes electricity and natural gas in the United States and the United Kingdom, with a dividend yield of 5.23% and a dividend growth rate of 19 years. And they also plan to invest $14.3 billion into its utility services through 2021, which will reward shareholders with a high stable dividend with moderate room for growth potential. My current my average cost on PPL is 3105, which I'm down on my position. It makes up less than 2% of my portfolio. Uh, and looks like the average person on Robinhood paid about $30. So I'm pretty in line with the average. I hope to continue to add on my position. Hopefully it does dwindle down. Recently, utilities have been running up recently because of all the trade war sensitivity. Okay, and the next stock of my portfolio is Tevia. So Tevia is a pharmaceutical company. It's one of the world's largest generic pharmaceutical manufacturers. Uh, the only reason I really purchased a few shares of Tevia was I was trying to do a swing trade just to make a quick buck, and this was right before all the states started suing Tevia for their opioid dilemma there. So I'm currently down on my position. This is a position that I just bought just to see where it would be a year or two from now. So I really don't care what happens to this position. And let's see what the average person paid on Robinhood. So it looks like the average person is with me. They're trying to be dumb and swing trade, which isn't a bad thing. At the minimum, I hope to at least regain my principal with Tevia Pharmacies, but really don't care too much about it. The next stock I own is TERP. The next stock I own is TERP. Terraform Power owns and operates clean power generating assets. The company's portfolio consists of wind and solar assets in the United States, Canada, the United Kingdom, and Chile, with the majority of their power coming from solar sites. With the purchase of a Spanish and wind and solar company and its plans to reduce its leverage ratio, which is how much capital comes in the form of debt or assesses the company's ability to meet its financial obligations, should keep the company paying a nice dividend for the next few years. With a lot of positive sentiment around clean energy, Terraform is still a risky stock, but given the ongoing demand for clean energy, I believe that it is a good long-term stock to hold, with a current dividend yield of 5.6%. So my average cost on TERP is 14.11, with it making up less than 1% of my portfolio. Let's see what the average person paid on Robinhood. So it looks like the average person paid about $12.50, so I kind of overpaid. But this is a stock that I do plan on holding for the long term, so I really don't care too much what happens in the short term. As long as it doesn't go out of business, we'll be good. Let's see, the next stock I own in my portfolio is, let's see, next stock I own is Caterpillar. So Caterpillar is a manufacturer of heavy equipment, power solutions, and locomotives. It is the world's largest manufacturer of heavy equipment. The company is divided into four segments: consumer industries, resource industries, energy and transportation, and Caterpillar Financial Services. With a current dividend yield of 2.5% and a 5-year dividend growth rate of 13.78%, I believe Caterpillar is a nice dividend growth stock. With its brand strength and global dealer network, Caterpillar is the world's 89th most valuable brand, right in front of its biggest competitor, Deere, which is the world's leading manufacturer of agricultural equipment, sitting at 92nd place. My current price on Caterpillar is $22.95. I'm up on my position almost 12%. It looks like the average person on Robinhood paid 35 135.82, which is about average, which is about what it's at right now. Um, it makes up about 5% of my portfolio, which is another position that I do plan on adding more, as long as it stays maybe within beneath the 140 region. The lower the better. I plan on making this position at least 10% of my portfolio. Now the next stock I own is, let's see, the next stock is Facebook. So Facebook is the world's largest online social network with more than 2 billion monthly active users. Their ecosystem consists mainly of Facebook, Instagram, WhatsApp, and even Oculus. Facebook generates most of their revenue from advertising. With Facebook's massive user base and its ability to monetize its ecosystem, it makes Facebook a promising long-term stock. They currently do not have a dividend, and I don't think they'll ever have a dividend, honestly. Basically, only reason you invest in Facebook is for the capital appreciation, which I'm up about 15%. I bought in at 68.52. My average cost, and looks like the average person on Robinhood paid about the same price as I did. If you were lucky to buy it in the 140s and 130s, congratulations to you. Now the next stock in my portfolio is LMT. Lockheed Martin is the largest defense contractor globally and is an industrial leader with their fighting aircrafts. Aeronautics, the science of practice and travel through the air, is the largest segment, accounting for 40% of Lockheed Martin sales. LMT's biggest risk is that it gets 80% of its revenue from the US government and the rest coming internationally. With a current dividend yield of 2.45%, a 5 year growth rate of 11.4%, and a payout ratio of 50%, and a dividend year growth rate of 17 years, I believe LMT is a solid pick for the future, regardless of whomever's in office, because whether it's Republican or Democrat, there's still going to be adequate amount of spending for national defense. My average cost on my position is $297, making up 10% of my portfolio. I currently own 5 shares. I plan on purchasing more of this stock as long as it dwindles down just a little bit. I'm not willing on paying $360. It's currently a little bit overpriced and trading at its 52-week high. Looks like the average person on Robinhood paid about $306 on this. Okay. The next stock in my portfolio, AGNC. Uh, AGNC, American Capital Agency, is a real estate investment trust that invests primarily in mortgage-backed securities. The only reason I invested in this stock, I purchased stock when I first got my Robinhood account, just to just to see some monthly dividends filter through my account. Oh, I don't even think it's monthly dividends, honestly, is it? May, June. Yeah, it is monthly dividends, just to see some dividends filtering through my account, so I won't be discouraged, because when you have such a small position starting off, not receiving any dividends, it's kind of sad. But the next stock I own is Ford. So Ford Motor Company manufactures automobiles under the Ford and Lincoln brand, with a dividend yield of 6% and a payout ratio of just shy of 52%. I think their dividend is safe, so as long as the Ford F-150 continues being the best-selling truck in America, and the Ford Mustang the best-selling sports car in America, along with Ford continuing to outperform their peers through innovation and investments like Rivian, which is a competitor to Tesla, who's making an electric truck. They make up about less than 0.3% of my portfolio, with my average cost being $10.54. And it looks like the average person on Robinhood paid $9.96. I think anything under $10 is a solid buying point for Ford. The next stock in my portfolio is 3M. So 3M is a diversified industrial business that operates in 4 segments: safety, industry, transportation, electronics, healthcare, and consumer. With a current yield of 3.32%, a 5 year growth rate of 16.5%, and they spend about 6% of their sales on research and development, as compared to the other companies that spend about 3% in the same industry. It's a reason why I like 3M, and then why I will still continue to add to my position as long as it stays in this relative low range. They make up about almost 4% of my portfolio, with my average cost being $171. Looks like the average cost for a person on Robinhood is $188, which is still a pretty good buying point. The next stock in my portfolio, Enbridge. Now, Enbridge is an energy company that operates in the United States and Canada. A major factor for Enbridge is the quality assets they own, like the Canadian Mainline crude pipeline system, which is the largest pipeline in Canada. I chose Enbridge because it brings some diversity to my portfolio while yielding a 6.03% dividend. Uh, my current average cost is 34.82 cents. I'm currently up on my position, and looks like the average person paid, oh, 27.04. Okay, that looks a little odd. Looks like the average person paid 27.04, so they got a better price than I did. The next stock in my portfolio is EA. Electronic Arts is one of the world's largest video game publishers, with large franchises like Madden, FIFA, Battlefield, Mass Effect, and Need for Speed. along with signing a 10-year deal with Disney, granting EA the rights to develop Star Wars games. I have a small position in EA. My average cost is 109. This was before that dip we had back in December. So I'm still down on my position, slowly coming back up. Let's see what the average person paid for that. Looks like the average person on Robinhood paid 102.34, so it's not too bad. So as long as your outlook is 2 3 years. Next stock I own is MTR, Mesa Royalty Trust, and this was another stock that I purchased in the beginning of my Robinhood portfolio. And basically, they own royalty interests in various oil and gas producing properties in the United States. They're headquartered out of Houston. MTR pays out more than a 10% dividend, which is a little bit risky, but they have been paying that dividend since the early 1990s. Now, it has been fairly unstable, but I do like this stock since it has been paying me a dividend. Honestly, I only have 2 shares. But if you see here, my dividend history, I'm getting a lot of dividends from them just for the past 2 years that I've held. But as you can see, they're fairly unstable. So 1 month, 33, 25, 21, 23. But I like them. I'm not going to add more into my position, but I like them. Next stock I own is Coke. Now, Coke is the Coca-Cola company is the largest non-alcoholic beverage company in the world, with Coca-Cola having 21 brands that bring in $1 billion in revenue each year. Customer loyalty and strong relations with retailers give Coca-Cola a stable foundation for future growth. With a current yield of 3.10% and a 56-year dividend growth rate, is one reason I really like the stock. With my average cost being just shy of $49, Coca-Cola is a stock that I do plan on purchasing more. I'm just waiting for it to dip a little bit. Looks like the average person on Robinhood paid about $46, which I think is a pretty good entry point, and it's the price point where I plan on adding into my position, as long as it goes down to that point. The next stock in my portfolio is, let's see, AbbVie. AbbVie is a drug company with strong exposure to immunology and oncology. The company's top drug, Humira, represents half of its current profit, with a dividend yield of 5.43% and a payout ratio of 53%. It leaves AbbVie's dividend relatively safe. Now, of recent, AbbVie did drop due to its an acquisition of Allegiant. It's a Botox company. It did drop, so I believe that AbbVie is a great long-term bet with a dividend yield of 5%, 5.43% is a stock that I plan to average down my cost. As you can see, my average cost is $72.31. It looks like the average person on Robinhood paid about $80, so they're currently underwater. Tragic, but at least they're enjoying a nice dividend. So the next stock in my portfolio is NVIDIA, which is a designer of graphic chips and enhances the experience of a computing platform. Their chips are used in high-end PCs for gaming, data centers, and automotive information systems. I believe NVIDIA is a great long-term bet. With its artificial intelligence within its data centers and self-driving vehicles will drive the firm's future growth. With a current dividend yield of 0.42%, a 5-year dividend growth rate of 14.5%, and a payout ratio of close to 12%, can unleash substantial dividend growth without interfering too much with research and development expenditures. My current cost on NVIDIA is $182.17, and looks like the average person on Robinhood got in at a pretty good price at $176.11. So the next stock in my portfolio is Digital Realty Trust. Now, Digital Realty Trust owns and operates 200 data centers worldwide. They would basically be a competitor to Iron Mountain, another stock that I own. They currently yield a 3.51% dividend with a growth rate of 15 years. The only reason I purchased DLR was to compare its performance with Iron Mountain. So my average cost is $116.23, and it looks like the average person on Robinhood paid $108.54. I honestly think Digital Realty Trust is a good long-term bet. Now the next stock in my portfolio is, which I think is my last, Next stock is Hanes manufactures basic and athletic apparel under brands like Hanes and Champions. Hanes has a strong brand while being known as affordable. Hanes has the highest market share in men's and children's underwear, socks, and t-shirts. It's honestly a brand that I use today. With a current dividend yield of 3.4% and a payout ratio of 35%, I think Hanes brand is a good stock to hold for the long term and a stock that I will be adding more into my position. My current cost is $17.05. I only own one share, but I plan on making this about 3% of my portfolio. It looks like the average person paid almost $18 on Hanes, which isn't too bad, but that's the end of my portfolio. If y'all liked it, make sure to leave a like and I guess what subscribe is that what people say nowadays? But see you next time.